Howdy y'all, Goose here, and today is October 16th. So if you notice, we actually missed last Friday, the 13th, but I'm just gonna kind of mush that in here. I got carried away. I had some personal things to do for most of the trading day, so I didn't get to make my recap video, but I didn't take a trade, so it doesn't matter too much. I'll just kind of start there though, so you can see what I saw in the morning. And why I didn't take a trade on anything, although I think there was potentially a trade to take, just wasn't strong enough for me. So on ES, we opened up right here around 43.95. That opening print ends up being support on the next few candles, especially on the 5-minute. I think a little bit more so, which I like to use the 5-minute when starting out the morning. You can see here really strong rejection wick off of that level, showing support. And we push off. So then later we come back and we kind of start to wick off, but we do break through it eventually. And right here, if you look at this level on the hourly, we can see previous support around this. This was yesterday's previous support around the open. So just a good sign that this is a level that can go either way. So it did show some support here, turned, broke through it fairly clean, at least on the 5-minute, fairly clean. So, an entry would have been this tweezer top right here that came right up to the opening print, which is also on confluence in the hourly at this previous support, which could be turning resistance. Have your stop just past here. I'll just go ahead and draw that out. Again, I didn't take this trade, but this is kind of the only thing in hindsight that I saw that I, of course, wish I took. But at the time, it just wasn't. I don't know. I thought there'd be something a little better, so I did not take it. This is actually quite a huge stop to put. So I don't know. I guess I wouldn't have put the stop quite that high. You could have risked, your standard. I mean, for me, I usually risk around 20 ticks. We'll just do like 24. So if you're looking at least twice, double of that, you could have had a trade like this. If you did decide to do this, which is kind of nuts, I think you need to at least be shooting double, personally. So that trade was there too, and I guess that could have been the pre-market low. It could have been the pre-market low. You could have targeted liquidity there. So it just wasn't really a strong trade for me. Maybe if this tweezer top sat higher up, so that the stop to be above this swing high, if that stop could just be not quite as big, I would have taken it. I get a little bit. Yeah, I just get a little nervous when this number gets high. I know you can also size down. So, I trade micros. You could have done this by sizing down by a third, right? If your normal stops around 20 ticks and you're tripling that, just size down a third and go for it here. So that's really the only trade I saw. I didn't take that, but I was looking for an OTE entry here, and this is where I want to spend some time, because if you have followed what I'm doing, or if you've learned the OTE strategy, you might have got caught and taken a loss, although I think there's a reason. Even if I was at the chart, there was a reason to not take this trade. That's really important to talk about. So you can see we come down, we make a new low of day, pop back up, make a new low of day. So right here is our strong high, right? That created a new low. And we want to see this break, so that's why I draw this arrow as always. We do end up seeing this break. This is... Now, I'm just going to switch this to the 3-minute, because I always use the 3-minute when doing my OTE strat. So on the 3-minute here, it's really visible. It was kind of visible on the 5-minute too. But one of the requirements for this OTE strategy is that you break through this market structure level with displacement. And displacement means fair value gaps, essentially. If you don't know what fair value gaps are, it's these gaps between wicks on 3 consecutive candles. So the top wick of the first one and the bottom wick of the third one. If there's a gap between here, you got your fair value gap. So just another signal of potential support and resistance. It also signifies strength. In this case, we want to see strength as we break through a level. And I use this 3-minute chart only for OTE whenever we're outside of the silver bullet window. So coming through here, there was displacement on the initial leg out. Right here, but I want to see displacement, especially through the break level. I mean, that's like, I wouldn't say it's an absolute requirement, but when you see this, which is really choppy, up and down, waking up and down, pretty much right on the level, we are climbing, but this is a little sloppy, and I would just this is a low probability setup, I guess is what I would call it. So, you know, if you do decide to take setups like this, again, they could work. You'd want to take them with small size, so at least, you know, half or less than your normal size, just because it's, you know, why do you want to risk your normal size on a lower probability setup? So I'm glad I wasn't even at the charts. Again, I had some things take me away. I was watching on my mobile, just kind of had some FOMO, like, oh, here we go, here's the pullback, you know, right to the entry, because in my head, you know, I would have been entering here, and you can see we, you know, so the trade I would have tried to create is something maybe like this, just something like this, and targeting liquidity back up there. You can actually use the fib tool. Let's see, so that fair value gap sat a little high. So let me get this out of the way. So normally I use this fib tool to kind of, you know, mark my entry, my rough entry, and that fair value gap sat high in the sense that I only start adding to the position at the 61.8, and I'll continue to add, you know, up to and a little bit through the 70.1. I don't have the next level marked. It's essentially the same gap as you know, the 61.8 to the 70.1. I just kind of give a little bit to add if I need to. So you can see here, this wick down gave us exactly that. We, you know, if you started adding here, like 1, 2, maybe third entry here, and then call it done, right? And you have your stop. Put this back now. So let's say your average sits, you know, if you did those 3 entries, your average would sit around the 70.1. That's kind of my goal. If I have multiple entries, keep my average around there. And you have your 20 tick stop. I mean, I probably, looking at this again, I would have really wanted to have my stop below this swing low. So this would have been a smaller size position if I did decide to take it, and targeting the liquidity at the other side of the PD array. So that provides us, you know, to our return, but you would have gotten stopped out, right? So again, lower probability setup. It's not to say never take them, but just something to keep in mind. This is messy. This break of the level here is not ideal. You want this to be cleaner. You want to see gaps like this forming along the way. Now, you do want to, you know, ideally enter on your gap as well, which we didn't quite have one even below there, right? This was not ideal. So a few reasons to have just skipped out on this. But yeah, that I think I saw on Twitter, on X, FK Twitter, a few people did get tripped up who use this OT strategy, and I saw, you know, some people I follow were talking about this price action up here. This is a big requirement. It's not just a look for it, it's a, you know, try to always have it. Really do. If you're doing a trade without that, be at least half your size. Just my 2 cents. If everything else is perfect. You could have also maybe read the price action just when you started to see like this candle close. Not a good sign. When you pull out on a nice wick like this, you'd want to see a push. Like one of these 2 candles should be a strong push, and so potentially you could have bailed here. Just wanted to go over that real quick because this OT strategy is really key to what I do, and I know I put a lot of weight on it. I back tested it quite a bit, so I like to just spend a lot of time analyzing even the ones I don't take, things that, you know, I should look for next time. And the biggest thing here is this not having good displacement, and that's kind of a core requirement. So moving on, there wasn't really too much else the rest of the day. This was a Friday, so, you know, after the first half of the day on a Friday, I usually would just leave anyways, but yeah, pretty boring price action. Let's fast forward to today, Monday the 16th. So I had 2 valid trades here. I was looking at ES this morning, and I saw us essentially climbing back out. You can see here from the Sunday open, we're just seeing price action starting to slowly climb back out. Good sign. There was this level of kind of, again, support / resistance that we were stuck in. We're pulling out and over it. So good sign that if we held above here, that there was some decent potential chance we could see an upward push. And I had that bias in the back of my head when I was waking up and starting to look at the chart. Over here on the 3-minute, Actually, I'm going to change this to the 5-minute because, like I said, at the beginning of the day, I actually start off with the 5-minute, and I spent the weekend going back over some ICT concepts, and specifically order blocks. So I just had that in my head coming into today, just order blocks and spotting them, potentially using it as confluence. So right off the bat, I ended up seeing an order block, and that's essentially that we had this uptrend on the 5-minute, and I had that marked down. So any pullback / red candle is a potential order block. Doesn't necessarily mean it is one, but it can potentially be one. And right here, we have our qualification for one, and that is that you have a type of support or resistance that it kind of bounces off of. So right here, these two candles essentially are one order block. You are looking for this to bounce off of support, which we do. In this case, the support is a fair value gap. I'm not going to leave this square here, but that's the gap right there. That, again, fair value gaps are a type of support and resistance along with order blocks themselves. So I've just used my same markings, my blue rectangle, to show the order block, but this is part of the requirement for the order block. You have this gap that it's bouncing out of. You have the fact that this is the top of the order block, and we push right past it here on the next green candle, and you want to look for a retest and hold of that order block. So right here, this is before the market opens, by the way. We're coming back down. I don't trade I almost never trade anything before the opening bell, and even at the opening bell, I like to wait a few minutes, but just again, order blocks were fresh in my mind. I was coming off of watching a bunch of content on that. So when I saw this and I saw where we're pulling right back in and when we're wicking right off of the kind of the 50% level, which you essentially want to hold in the order block, this was just, to me, a really good indicator that things looked like it was definitely going to go up. Again, I had that bias for going long. So I didn't take it off the open. I like to wait at least 5 minutes. And that's what I did. I'm glad I stuck to that rule, because had I entered here, we push up and we come back down really strong. It's just scary to be in that position. You start to feel like bailing, and but when you're not in at all and you see that the order block is potentially going to hold, which it did right here. So the red candle, I guess this is a little bit incorrect. Anyways, yeah, when this came back down, I was already primed and ready to enter. I hop in. I have my stop. You can see down here. This is about 20 ticks. So I had my stop at 16 ticks. So the reason it's 16, not 20, basically my thinking was that if price even gets down here, it's probably going to close in this half of the order block, the bottom half, and that's when the order block becomes invalidated. So that's why my stop was a little bit tighter than the normal 20. You could have done the 20 if you wanted to. We had profit at roughly 47, around 50. I think I had it, I just had it there because the risk-reward ratio being 3 was plenty. But this ended up being a really nice trade. I mean, you could have left runners and milked this. I was going to leave like 2 micros to kind of push a little bit more, but this trade just took a little longer than I liked, especially at the beginning of the day when price is volatile. So again, live trades for wins are always tacked on to the end of the videos, if you want to take a look at that. But I was really eager, to get out of this trade. It was just taking a long time. It wasn't too bad, but it was about 30 minutes, right? 0 by 6 roughly. So yeah, I ended up just killing the whole position right here. Anyways, going into the rest of the day, I was really happy off that. I took it with like 6 micros total, so not too bad, about 60% of my regular size. And then when we pushed up here to the new high of day, I didn't see anything as far as like OTE wasn't setting up. Well, I take that back. It was setting up, but it took a long time to happen. So I marked out our let me switch this back to a 3-minute because that's what I used for OTE. And resize this. So as this is making new highs, we see this is my strong low here. The reason it's here and not up here, I like to have at least 2 counter trend candles to confirm a retracement, or rather to confirm the potential strong high or strong low. So this is just my way of doing it. I mean, you could have had your strong low here that eventually did get broken, and it would have it wouldn't have changed too much on the trade. This just means I take these trades less often because I'm a little pickier. But I think that the win rate on them is a little better when you use that method. So we had our 2 counter trend candles. They don't have to be touching. Just has to be within the trend down. That there's like 2, and that they have lower lows and lower highs. That's kind of what I look for. So we had that here. Make a new high of day. This becomes our market structure shift area. We start retracing back, as we like to expect to see, and I marked out our fair value gap on the 3-minute. And this fair value gap after we start to turn around. So as soon as we start to see, another potential extension, but in the OTE case, we're just hoping for a quick little pullback. When I start to see that happen, I also use 2 candles. So 2 green candles now. My fib is done. Even if this comes lower again, I don't move my fib retracement. By the way, I don't know if I've explained that in previous videos, but I was just sitting here, waiting for a full retracement back to that fair value gap, and we got this ugly chop. I don't know why it was so bad, but yeah, I had to like step away and do some stuff because looking at this was really just boring, and it was the middle of the day, to be fair. But yeah, as we made this push up and my alert got triggered, I started to come back and enter. I entered with just a really small size, by the way. That's not why. That's a big reason why my total win for the day is not what it should have been. Like, had I traded full size on both of these, would have been like a $1,400 day. But I'm just not quite there yet. Again, I started the account with some small losses, so I just wanted to size down, crawl back out. It took me a long time to get to this point, so I want to make sure if I fail on the strategy. I don't fail on some unlucky, impulsive trade or series of trades. So I'd rather let the strategy play out over time, and that's kind of what I mean when I say trade long. Always think long term, and especially when you get into drawdown, don't feel like you have to quickly get back out. Take your time, stay in drawdown, get out using your strategy and using your edge. So I took this really small, and the reason is because I was already small on the first trade, but because that first trade was a win, I was even smaller because I don't want to go back to break even or red for the day. Just mentally, it's just not a good thing to do. You're very likely to make a bad decision, potentially overtrade if that happens. So I entered up here with just 2 MES and near perfect entry. I had my stop just over high a day, total of 20 ticks, what I like to usually have. And this was just a beautiful, really fast trade. I mean, roughly 10 minutes from entry. Straight down, taking out all this liquidity. So this right here, this boring stuff, this is liquidity. So if we do get the entry, the fact that it did all this, I think this actually makes it a higher percentage win. I don't have data backing that. It's just a hunch, but I'll maybe have to look to test this someday. But yeah, I was really happy with this trade, even though it barely made me anything. I think it made me like 150 or so. I'm just really proud of the move itself. And it was another 3R, actually over 3R. So just really happy on the day, because even though the amount total was small, the fact that I nailed both of these trades using my system and I avoided doing anything else that, again, is not part of my system, this was essentially a perfect day. Yeah, I was a little nervous and I took it with small size, but overall really, really happy with the way today went. Another interesting note is that we had this FVG on the 3-minute out of the open when we had some good displacement down here, and this perfectly filled. And I'm not saying that to like propose, I definitely should have held it to the FVG. Hindsight's always going to be better, but I do remember seeing this FVG. That's why I marked them out. So in the middle of the trade, they can be kind of like targets, at least to have maybe a runner or something get to. But this was such a small trade. I only had 2 MES. If I had like another 6 or 10 micros, then I would maybe drop half or so here and then look to carry another half into here. But I just got out of everything here. And actually, if you look, it's a little bit sooner than my normal fib target. And that's just because this just happens so fast. Whenever a move is this quick, like the candle just shoots down, price was coming down here really quickly. And I was scared for just another pullback to have to wait for it to hit. So just got a little impatient, but it's not a big deal. I was in very, very small. So those were my trades for the day. market is just about to close and nothing else really presented itself. So like overall, almost a perfect day if my sizing was normal. But that's fine. That's going to come in time. The biggest thing when I journal about today is saying that I saw these really good setups and I stuck to my rules, and I didn't play anything else. So I think that's the really nice thing about having a system is that when you win with your system, you walk away feeling really good, even when you size in small. Like today, it's small, like not a big day. It's actually less than my one win on a normal day. Excited for the rest of the week. Yeah, really good start. That was the other intention behind sizing a little bit smaller, was just to kind of ensure the start of the week doesn't start bad. I'm not going to be in a negative mindset or anything like that. And as always, put your questions or comments down below. See y'all tomorrow.